Good afternoon, my name is Lambert, market analyst at Jalatama Management, and I'm here on Monday the 22nd of July to give you the weekly gold report. The yellow metal opened and closed in the 1290s last week, dipping as low as 1270 on Wednesday during Ben Bernanke's words of testimony in the semi-annual report, and then rebounding to test around the 1300 level. This morning the market has popped through 1300 on the fourth attempt, leading to a surge peaking at 1318 for now. At large, the Federal Reserve Chairman equally balanced out the dovish and hawkish remarks, which has prolonged the uncertainty surrounding the tapering timeline. The phrase data dependent is still the predominant term to describe how the Fed intends to pan out the slowdown, but Ben Bernanke did clearly state that the intention to dial down the stimulus is still there. Therefore, the expectation game is likely to continue for some time to come, with each economic number having larger potential than usual to impact the markets. In my Tuesday report, I mentioned that job creation, growth and spending cuts and forthcoming tapering, all existing concurrently in the US, seems a little too good to be true and makes the sceptical market observer question how long this can go on for, especially taking into account issues with global growth emanating from China and Europe. As I have mentioned numerous times, if it all transpired that it is too good to be true, then gold should be a beneficiary and pare back a good portion of its circa 25% of losses so far this year. However, it is quite probable the bears will regain control and head towards this year's low of 1179 as we see some bulls profit taking after this bear market rally. Now the bulls have forced their way through 1300 resistance shown by the green horizontal line and the long-term bearish trend line beginning back in April, we should see the market have a bullish week. 1300 should now act as a support level, so for those traders who have missed the breakout, a retreat to the 1300 to 1310 area could be an opportune time to go long, especially if price looks like it wants to bounce off a Fibonacci retracement level. A feasible profit target for position traders over the course of the next 2 weeks is $85, which is the distance of the uptrend drawing May. So add this onto the breakout level of 1300, the target level would be 1385 for position traders. For shorter term traders, look for short pivot trades around 1320, which seems to be a new resistance level, which is probably attributed to the fact that 1321 was a former support level in April. This week's data will be closely scrutinised for clues on the tapering timeline. The main events are the Eurozone's and China's manufacturing and services data on Wednesday. We have US home sales data on Monday and Wednesday at 3 p.m. GMT on both days. Thursday is a big day with the German IFO survey, UK GDP, and also we have US durable goods orders. So have your economic calendar ready for that. Thank you for listening to me, and I'll speak to you again next week.